When it comes to the Aussies, do you think they're anywhere near close to the terminal rate at this point?
Yeah, I think they are, but I think it's worth being a little bit cautious. I mean, again, like the US, they've had a lot of help from base effect. You know, the big rises month on month that we saw in the middle of last year. Now, as we go into the sort of back end of this year, once we get past July, the July CPI numbers, they're not going to be quite so evident until you get right up till November, December. Then it's going to start dropping again. We've got things like electricity tariff hikes to come through in July, which will come through in the September CPI, or the release in September. And that could see inflation actually beginning to trickle back up a little bit. Very, very similar story to the US. If we don't see those month-on-month run rates of inflation coming down, we could start to see that head up again. So that's where we think we might see another 25 basis points of tightening. But we think the market's still looking for a bit too much. It's about 1.3 hikes they've got priced in at the moment. I would say that the one looks reasonable, but more than that doesn't.
Robert, it was only a couple of months ago. Good morning to you, sir. It was only a couple of months ago that we were saying that the Australian Central Bank had made a complete pig's ear of everything, hadn't forecast the rate hikes, have got the communication wrong, got it wrong for workers and mortgage holders. Are we saying that they've dusted themselves down and actually are back on track now with their structure and with their planning and with their communication?
Well, I'll just say I managed to get this one right, so perhaps the communication is going a little better. I mean, June was a sort of real roll of the dice, and that came up okay for us as well. But the communication has been a real problem for them. I think they've tried to use forward guidance a lot, and often in a way that sent the market the wrong way. So perhaps saying less is somewhat more useful at times than saying too much more. Let the data do the talking. And I think it did do the talking this month. We focused on the inflation numbers. They came down. As long as they're coming down, then there isn't that much more for the RBA to do on top of that. Although, of course, there is some slight confusion coming from things like the labour market. But in the end, as long as the inflation numbers come down, the labour market can do what it does.
Robert, a quick word for those of us, me included, who look at Australia, obviously look at the very strong domestic flows, but also look at the importance of key markets such as China. And I've got to be honest, there are still some grave concerns about China and what that means for Australian exports as well. Is the central bank making these decisions with a nod to China, or is it purely about what's going on domestically?
I mean, what you say about China is absolutely right, and Australia is probably one of the most regionally tied into that through its extraction industries and its exports of things like coking coal and iron ore and all sorts of stuff of that nature. So it does get moved around by this. But I think the RBA is really focused very heavily on the domestic economy and what's going on there. The inflation numbers are absolutely key for them, but they really are very interested in what's going on in the labour market and probably scratching their head, as many other central banks around the world are, going, why hasn't it weakened yet? But still, we see inflation coming down.
Robert, let me ask you about the Japanese, because there's a conversation that seems to be happening on a daily basis between the Japanese and the Americans, potentially keeping many authorities poised just in case the Japanese intervene in the currency or there is some sort of change when it comes to monetary policy. How are you thinking about what the BOJ and what Japanese authorities will be up to this year in terms of market action?
Well, we're actually looking for some later this month. We get the July quarterly outlook coming out. We think they'll be revising up their GDP forecast. The macro story is looking pretty good for Japan. Actually, better than for most of my career. It's looking really quite promising. We've got inflation finally again. The wages numbers aren't quite doing it for us, but they're certainly looking better than they have in the past. This is perhaps one of the best times the BOJ could choose to do something with its monetary policy rather than just doing absolutely nothing. So we think a tweak to the yield curve control policy coming in July. Nothing really in terms of policy rates until next year. But this would be a good time. The bond market as well, JGBs, I mean, they're below their current target. So they're not kind of straining at the ceiling. So again, a good time to be coming out with some minor changes, even if they're just sort of wrapped up as, providing more flexibility rather than an actual tightening of policy.